for our Monday special Midcap Mania with Nigel de Souza. And this is the last Midcap Mania of the year, so this is going to be a special one, I hope. The stock on his radar is a company traditionally known as a tea company, but now has ventured in QSR business and the defense sector. Nigel, first tell us what is this QSR business and tell us about the stock as well.
Oh, the QSR's business, Sonia, is known as Kebab Express. In fact, I always thought it was only a tea company, but I've been doing some research. I don't know how special it is, but it's definitely an interesting company. So the stock that we're talking about is Rossell India. Keep in mind that the volumes are fairly on the low side, so just hear me out first. The stock move in the last few months has been quite good. So from March 2015, the stock is high with a gain of close to around 120%, and since September, it's been on a big run, 60% higher. Always the first half of a tea company, of the financial year for a tea company, is always relatively better, though the stock has come off the high point. Promoter holding fairly good, close to around 75%, odd. Institutions as well holding close to around 10%, so a fairly tightly held company. We have Elara India Opportunity Fund that holds close to around 9.5%. That's the big shared holding over there. If you take a look at the financials, the first half of the year, fairly good, but it's a 550 crore market capitalization, so nothing really alarming or nothing really very, very attractive. Revenues have been higher. You look at the profitability as well, has been higher with a gain of close to around 20% if you compare it on a year-on-year basis, though it's only 11 crores and we're comparing it for a market capitalization of around 550 crores. Second half of the year is traditionally weaker for a tea company. But let's look into the three business verticals then. They're into the tea business, they have a QSR business, and they also have the aerospace and defense business, though the tea business contributes close to around 80 to around 85% of the total revenues currently. Focusing on the tea business first, they have some marquee clients. If you just take a look at it, something like a Starbucks, we have Twinings as well in there among their big names. And further into the tea business, they enjoy a higher realizations, close to around 40% higher than the industry average, and also close to around 20% of their production is exported. So it tells you the quality of the tea that they are producing. But the aerospace as well as the defense business, that could be a big changer maybe in the next couple of years. Currently, in fact, it's a small part of their business. The revenues as well have shot up over there. It's come in higher by close to around 60% approximately. And last quarter, they turned EBIT positive. So that was, they gave a positive number of around 2 crores. That compares with an EBIT loss. They have large clients, and the biggest client over there is Boeing. And we have got quite a few positive comments coming out of Boeing in this year itself. They're talking about a large amount of planes coming into India, and the commentary has been quite strong. So what does this company, that's Rossell India, do for Boeing? They deliver projects for Boeing in the wire harness business. And I spoke to a couple of people in the management early this morning itself, and they said that's a very niche market, and they're one of the only people who are doing this. So that could provide a big opportunity going ahead. In terms of the QSR business, I don't know whether Anuj has visited any of it, but I'm told that it's only in the NCR region. That's only in Delhi currently. They have only around 10 outlets roughly. They're looking to open quite a few outlets, but in terms of revenues, it's not doing much, and it's giving you an EBIT loss currently. So actually, it's a bit of a drag on profitability if you just take a look at the numbers. In terms of risk, there are quite a few risks. A company that's producing tea, getting into defense, and then also have Kebab Express. Too much diversification, maybe. Seasonality in the tea business as well. Second half of the year always weaker. That's not great. And QSR business, suppose if it doesn't turn around, then in fact that could be a bit of a drag. And finally, there is great potential in the defense as well as the aerospace business. But what if that doesn't come about? Valuation-wise, still fairly expensive. Maybe in the next couple of years, we'll know exactly the true value of this company. For the time being, a major tea play. Back to you.
All right, Nigel, thanks a lot for that. So tea, defense, kebab.
Whatever you want.
Whatever you want. Too much diversification.
Too much.
Yes. Intraday chart.